let me. Okay, I think we're good. All right. This is the next thing we're going to look at. But anyway, I want to, I do want to like maybe have a class discussion. Even though y'all had the discussion and you read it and all that, I just kind of want to throw some of my thoughts out there at you about the whole whistleblower thing. It was kind of funny. There were I've read like 12, and some people were kind of like, well, it's not my business. I'm not getting involved. And then your fears were, the fears that y'all had were, understandable. They were reasonable. Fear of getting fired, fear of retaliation against your family, fear against retaliation personally. I mean, those are legitimate fears, especially if you don't know. Of course, I may be a bit more paranoid than most because of my husband, but you don't know how crazy people are and what they'll do. And if you're dealing with people that are narcissistic and sociopathic, which a lot of people that steal and embezzle, like they're smooth people like that'll do that kind of stuff, they don't have any conscience. No conscience, no, and no sense of remorse, no feelings of guilt, so you're dealing with,
there's a lot of money on the line.
You're dealing with a scary person though, who doesn't care if they kill you. They don't feel bad about that. That's
Care
scary.
about their money.
Yeah. So yeah, that's a scary position to be in. But of course, if you don't, more than likely it's going to get discovered at some point. It may take years, but generally they don't take. I took a fraud class as part of my master's curriculum, and it was cool. I enjoyed that. It was probably my favorite class. The guy that taught it is, he's a professor at MC, and he used to work for the state tax commission, and he was an auditor. So he would go out and audit and catch people, evading taxes, sales tax, income tax, whatever. And he had some pretty interesting stories, but we had to find a story and research it and write kind of this paper on it of a fraud, corporate fraud. And the one I found, it was really interesting because this woman had been getting away with it for like 12 years. And that's like the longest in history that anybody's ever gotten away with embezzling. So it's usually, 4, 5, 6 years max. But I mean, it's going to come out eventually. And if it's discovered that you knew about it, that makes you an accessory. I think you said that. So that's scary. You don't want to go to jail because you didn't report it. I think the best thing to do would be, I don't know, possibly report it to law enforcement. FBI is pretty good to listen, and they'll investigate. That way you don't have to fear retaliation from your boss or your coworkers. If, you keep it on the down low, they keep it quiet and keep they don't share the information with anybody. It's just scary. There's so many dishonest and corrupt people. You just don't know who you're dealing with and what you're dealing with and what they'll do, what they're capable of. People that are sociopaths are scary. And you may not realize it until it's too late because they're really good at hiding it. I think I've got somebody in my life who has got some of these tendencies. And anyway, it's scary because you begin to wonder, do they really have feelings or are they just mimicking what they see other people do? It's scary to think that someone's mind can be like that. And there's no cure for being a sociopath. You literally have to want to seek treatment for it, and you can get better if you want to, but the nature of a sociopathic person is not to care. So it's like, so it's scary. Psychopath is even scarier. That's a sociopath who will kill you. It's crazy. Anyway, you watch too many of those crime shows, you won't go outside. I did that for a while. I was watching Cold Case Files. I was watching 3 different shows. And I got to where when I get out the car to go to the grocery store, I was like, I got to stop. I got to be able to live. I got to be aware of things going on, but I can't be paranoid all the time. That's scary. All right, so y'all, we're gonna, we've already done this exercise here where we went through this Net Solutions November group of transactions, and we indicated what went where and why. So what we're gonna do next is, I left all of this stuff in my office. Okay. So what I wanna do is, I wanna show you, we've got the accounting equation across the top here. And then we've got, you know, the asset categories listed there. This is accounts payable. Evidently, I just forgot to write it on here. And then we've got, under the owner's equity element, I've got your capital account, which is owner's equity. Then I've got fees earned, which increase your equity. And then these categories that decrease owner's equity, that's the effect they have on it. So I want to show you kind of from a different angle how the different transactions affect the accounting equation elements, and just illustrate it this way. Yesterday, we did it in one class yesterday, and I'm like, oh, you know, kind of seemed to help the light bulb come on. Okay, so y'all are going to have to help me because I left my thing in. So the first transaction, he puts in $25,000. So we increased cash 25. Okay. All right. You have your, okay, you got them. Okay. I was gonna say, if you didn't have your sheets, I've got an extra copy. I just gotta go get it. All right, and then what was the other part of that? We increased owner's equity, right? It was Chris Clark Capital. Okay, so you see that we're putting our 25,000 in on the increase side of cash, and we're putting that on the increase side of capital. All right, so real quick, these things that look like big T's, those are called T accounts. That's kind of a primitive way to plot out accounting transactions, but I'm telling you that old school accountants, myself included, if you were trying to work on an entry or something and you couldn't quite figure it out, we would use that quite a bit just to help us plot it out. So, you know, this is a helpful way to figure things out sometimes. But what I want you to notice as we're doing these, okay, so we've got something happening on the left side of the T account over here, and then the right side of the T account here. So think about it like a seesaw. We're still balanced. You've got something on the left side, something on the right side. So our equation is balancing. Does that make sense? Okay. So the second thing he did was buy land. Okay, so the land increased, right? 20,000, and our cash decreased, right? So you've got, even though we're still on the same side of the equation, you've got something happening on the left side of the T account, something happening on the right side, so we still balance. So there's a copy of this thing in here. Something to keep. Purchasing memorized. I'm not so sure. Do we buy supplies next? That's sad, isn't it? You know that I've done this so many times, so I've got it memorized. Okay, so for the third thing, wait a minute, I'm on the wrong one. No wonder. Wait, I didn't look the same. That's the next one, but it's set up the same way. Okay, so the third thing, bought supplies. You said I was right. So what did it do to our supplies? Did it increase it or decrease it? Increase it. So we're going to put $13.50 on our plus side, our increase side, and then agreed to pay later. So that increased our accounts payable, right? And see, by looking at this, you can tell that the increase side of the T account on the assets is on the left side. The increase for this side of the equation is the right side. So that's what we're going to kind of get into next chapter, but this will kind of get your feet wet a little bit. So see, we're still balancing. That's important. Receive cash for providing services to customers. So we increased our cash, right? $7,500. And we increased our fees earned, right? Because he provided services, and got paid right then. So no accounts receivable. All right, and then on the next one, we have some expenses that were paid. So all of the expenses increased, and our cash is going to decrease. Tell me how much our cash is decreasing. Okay, so I've got wages, $21.25. I've got rent, $800. I've got utilities, $450. And then I've got miscellaneous, $275. And you would add those all together to see how much we're reducing cash by. $3,050?
Yeah.
$36.50. Okay. I remember. I keep trying to make it $30.50. Well, I couldn't remember the exact number, but I knew it was closer to 3,000 something. So you've got all these on the left, these transactions, and you've got this one on the right to balance it out. Okay. Now, paid creditors on account, $950. So we're decreasing our cash, so we'll put $950 on our decrease side for our cash, but we're also decreasing our payables because we don't owe this anymore. So we'll put that $950 on the decrease side for accounts payable. Is this making sense? It's just kind of like fill in the blanks. All right, Chris determined that cost of supplies on hand is $550. So if he started with $13.50 and now he has $550, how much went out? How much got used? On hand means that's what you got left.
800.
800. So our supplies went down, they decreased. We said that on the sheet, we just didn't say by how much. And our supplies expense increased. And then the last one, Chris Clark withdrew $2,000 from Net Solutions for personal use. So we said our drawing account, I said withdrawals, draws, drawing, they're all the same thing. So if you were to put any of that variation on a test to fill in a blank, I'm not going to count it wrong. Doing your homework, they have that list for you. So you never have to worry on your homework about generating a name for something. You go in those labels. And I would suggest when you're using those labels to copy and paste to save yourself some headache. When you have those blank sheet problems, go to that list of labels and copy and paste it. And that way you don't have to retype it. And it's just like they have it, and they're not going to ding you say it wrong. If you missed a comma or something, you know, it's just, it's a computer software. It's, you know, a little more ticky. All right, so he withdrew money. So our cash, I'm going to show the $2,000 on the decrease side, and then his drawing, $2,000 on, it increased our drawing. So we still have something on the right, something on the left. So is that making sense to y'all? Okay. So the next thing I want to do is show y'all kind of the next step. Let's go in here. We're going to determine what the balances are in each one of these. Each one of these little things I've got a T for is called an account. You'll hear me say that a lot. It's a category, essentially is what it is. In accounting, we call them accounts. So that's what I mean when I say accounts. All right, so to get our balance in cash, we would add all of our pluses and all of our minuses and get the difference, and the balance is going to be on the side that's higher. So if you added, if you wanted to put totals here, you could. So we've got 32.5 for our pluses. And then how many for our minuses? 23,650, 25,650, 650. Anybody got it yet? 6, 7, 34. How much?
26,600.
I was like going too far. All right, so we've got more pluses than we've got minuses, right? So our balance is going to be a plus. So what is it? How much? Take the difference.
5,900.
Okay, so we end up with 5,900. All right, so all your additions to cash, all your payments out of cash, and you end up with 5,900 bucks. It's kind of like your checking account. You've gotten some money in, you've spent some. What do you got left? I mean, it's kind of common sense, but it's just in a different format. All right, supplies. What's the difference in our pluses and our minuses?
550.
550, which you will notice that in that transaction description, it says he went and saw that they had 550 on hand. So that's what you should end up with. If they tell you you have a certain amount on hand, that should be your ending number. Okay, so land, we don't have to do anything to. What about your accounts payable? 400 on the right side? Okay. Now we got Chris Clark Capital. All these just have one thing, so that's nothing really to do. Okay. So now we know we've got, let's see, if we were to add everything up on the asset side, we've got 20,550 plus 25,900, 26 minus 100. Y'all add it up for me, put me out of my misery. What are you trying to do? What's the total assets?
26,450.
Thank you. Okay, so that's my assets. Okay, my liabilities are 400. So let's add up everything that affects owner's equity. 25,000, 7,500 on the right side, but subtract everything that shows up on the left because they're on the opposite side of the T account. So you've got 32,500 minus all these expenses. You come up with the total or a net?
26,050.
So 26,050 is my total on the equity side, right? So if we are going to support the idea that assets equals liabilities plus owner's equity, does it work? So we are in balance. That's a good thing. Okay. So that supports your accounting equation. Does that help you at all doing it that way? The way the book has it, you doing it is, to me, a little bit more confusing, so I chose my own method this time. We're going to see if it's better or worse. So far, so good. And this down here was just a repeat of those transactions, so you'd have them on the same page. Okay, so we're going to get into the next thing. Did y'all read your part 3? Yes? Maybe? No? You filled in the blanks? You took the test? Took a stab at it? Called each other on the phone and took it together? Yeah. All right, so that was page 9. Okay. All right, so the next thing we're going to do, let's talk about financial statements real quick. All right, the primary financial statements of a practice, and that's where you'll see general purpose. They called them general purpose financial statements. I've got to learn to write on this thing. It's like learning to write all over again. It doesn't look always. Maybe I should have one of y'all do this. What is the deal?
Is it with the pin down here or the rest of it?
The size of your eraser is really tiny. If you maximize it, you should be fine.
Do what now?
There's an erasure button up there at the very top.
Yeah, I've
There
done
should
that.
be a way to maximize the size because you have a really tiny.
Oh, is that
eraser
it?
Going on right now.
Aha. Well, I did that one time and it didn't really seem to make
There
any
you go.
difference.
Now it's working.
Yeah, we'll see. I'm telling you, it's me. It's gotta be me. Y'all don't hesitate to like direct me. I can take it. As long as you don't call me an idiot to my face. I probably wouldn't care. I'd probably agree with you. Okay, so now we're not gonna write
You
because
gotta
I've
select the
changed
right
it
button
to,
now. I'm just
Yeah.
saying yes.
got it.
Almost.
You hate me. We wanna pick a different color. Y'all want something fancy? Y'all wanna do like, that red's creepy. Let's do that one. Why not? Because we can.
You heard that recipe like this.
Well, it's red and black. It's kind of, it's pretty, but it's kind of, I'm not sure how good it would look up here. See, my eraser is not working at all. It should still work, even though I don't have it picked. There we go. Income statement. That's kind of hard to see, isn't it? It's pretty, but it's kind of hard to see. Let's put it back on purple.
That doesn't be hard. It's easier to see.
You think? Well, I don't know, because it's not gonna show me. It's decided, no, I'm not. The amount of time that we waste doing this crazy kind of stuff is just incredible. All right, so we've got statement of owner's equity. Yeah, I think you're right. There's some kind of lag in the connection or something too, because it's like hanging up. I'm telling y'all, I think my patience is being tried. All you do is laugh. Just laugh and keep going. All right, and this order that I'm listing them in is the order we'll prepare them in. All right, so the next one's going to be a balance sheet. It's going to show up in just a second. What is the deal? Has the Wi-Fi been lying? I mean, I'm on the Ethernet cable, so I mean, I shouldn't be. I mean, I'm plugged in. I shouldn't be,
That's terrifying.
isn't it?
If it's lagging like cable.
I know, right?
I wouldn't trust it. That's fine.
I'm not changing over to Wi-Fi at this point, no. Okay, and then the statement of cash flows is the fourth one. We're not going to focus too heavy on that statement of cash flows, and the one that we're going to briefly look at is, to me, the easier one to prepare. So we'll get deeper into the statement of cash flows if you take accounting too. Who's taking accounting too? Oh, I'll see y'all again. Aren't you excited? I'll tell you one thing the accounting 2 students did say, and they say it every semester. This is much easier than accounting 1. And it's not, it's just that they hadn't been there that long. Just waiting for it. It's gonna get worse. I'm kidding. Kind of.
Can't be
It's
worse.
kind of like, huh?
Can't be worse than comp 2.
It kind of comes together at the end of the semester. So how about if you're like you go to college and your advisor tells you that because of your English ACT score, okay, now somewhere in the translation I missed this. I was eligible to take accelerated comp. I understood that I had to. I took accelerated comp 1 and 2. And then it's about the end of close to the end of the second semester, I was like, I did not have to take this. And why didn't somebody take it? I thought he told me I had to. So believe me, it gets worse. There is a worse one. All right, so your financial statements are going to be identified by the, what's the answer to that one? Anybody got it? Huh? Name of the business, yeah. And I'll show you what that means in a minute. Okay, then the title of the statement, what the title of the statement is It's going so slow, I'm gonna misspell something. These are your titles of your statements, okay? It'll be income statement, it'll be statement of owner's equity, it'll be balance sheet, or it'll be statement of cash flows. The name of the business is just gonna be the name of the business. What's their name? And then the date or period of time. You'll have 3 lines on the top of every financial statement, and we'll be illustrating this here in a minute. This is just kind of your background. And then that'll be your top part. You'll always have that on every financial statement. All right, so an income state's going to report your income and expenses for a period of time. Think month, quarter, or year. It's going to cover a period of time. Okay, your matching concept comes into play here. And what that means is we want to match all of the expenses that occurred to make this revenue happen all together on the same period. So if we get our power bill, let's say we're looking at the month of August, and we get our power bill for the month of August in September, we're going to want to record that on August as a payable because we used that power in August to do business in August that generated our revenue in August. Matching. Make sure you've got everything together that belongs together in the same period. Okay. All right. So when revenue is more than expenses, the result is net income. That means your income is higher. That's a positive number on the bottom. Now, when it's the other way around and you have more expenses than you have income, you've got a net loss. All right, this is extremely important to note here, so store it and go back and remember it. When we go to preparing these financial statements, on the income statement, you're going to list your expenses. Your revenue will always be listed first, but when you go to list your expenses, you'll always list them in the order of the largest dollar amount to the smallest dollar amount, with the exception of miscellaneous expense. It will always be the last one listed, regardless of how much it is. So again, that's very important. All right, your statement of owner's equity is going to come after your income statement. Maybe it's this color. And before your balance sheet. And there's a reason for that you'll see when we start. It's viewed as the connecting link between the income statement and the balance sheet. This really is weird how slow it's doing. I wonder if it is the color. Doesn't make sense that it would be, does it? I think it's me. I think I'm somewhat cursed. All right, so it reports the changes in owner's equity for a period of time. So what you would see on your statement of owner's equity is owner investments, owner withdrawal, and net income. And you'll see that shortly. All right. Your balance sheet, it reports assets, liabilities, I'm going to abbreviate, and owner's equity as of a specific date. Now, you may want to highlight that, circle it, star it, whatever, because it's the only financial statement that has a different kind of date format. All of the other ones will say something like, for the month ended August 31st, 2020. Your balance sheet would say August 31st, 2020. It's not going to have for the, for the whatever ended, for the month ended, quarter ended, year ended, whatever period you're reporting on. It's just going to have the month end date. All right. And also the balance sheet is a formal representation of the accounting equation. That's also important for you to remember. You may see that. You may see that again on a test. But it is because you list the assets at the top, and then you'll list at the bottom, and you get a total. Then you have a bottom part that has liabilities, owner's equity, and the total, and they have to match, just like with the accounting equation. All right, so the assets, this is also important as far as what order do you put them on there in. we're gonna list our assets in the order that they will be converted to cash. That's called liquidity. Like how easily can you convert something to cash? So the first one, cash is always gonna be first because cash is already cash. It's very liquid. You'll usually see accounts receivable next. And this is the theory behind that. If you had to collect cash, you can call your customers and request that they pay early. And you can collect some cash pretty quick. Now, usually you'll see like supplies next. Now, I mean, you might be able to get some cash for your supplies if you were able to return some stuff. I mean, otherwise you might have to try to sell it off to somebody, and that's not going to be a quick process, and you might not get all your money. So you know what I'm saying? It's a lot more trouble to try to figure out what to do with supplies. And then eventually we'll have stuff like prepaid, insurance, or prepaid rent. Is that the ones y'all found, or did you even find them? You didn't find them? Okay. And again, really all three of these are prepaid expense accounts. Supplies is, it's just not named that way. A lot of times when you pay insurance policies, companies will pay them, maybe they pay them 1 month at a time, which would not be prepaid. But sometimes they'll bill you like every quarter or twice a year, or some companies may pay the whole year at one time. So 1 month would be an expense for the month you're in, and the rest of it's prepaid. You don't expense it till you get a benefit from it. You don't get benefit until time passes. Does that make sense? Or am I just rattling? I am rattling, but if it makes sense, that's what I'm getting at. Land, buildings, and equipment, you're always going to put those last in your list of assets because they are more permanent in nature. Now, could you get cash for them? Well, yeah. But think about how much time that takes. Unless you've got somebody sitting right there that wants to buy it, it's going to take some time. All right, and then the liabilities section, the first item you'll see down there is accounts payable. And they're generally going to appear in the order that they're going to be paid in. Okay, so this is your note on your assets to list them in the order of liquidity. Okay, then you got your statement of cash flows. There's 3 sections on this thing. Operating activities. And that reports a summary of cash receipts and cash. Yeah, but what's it from what? Operations? From operations. Okay. So that means your day-to-day stuff that you do as a business, that's your revenue, and that's your wages expense and stuff like that. All right, net cash flow from operating activities normally, what's that one? Yeah, since I don't have mine. I know what, I know how to explain it, but, oh, yeah, it differs, okay. Yeah, it's not gonna be your net income. I mean, your net income is gonna include stuff like, stuff we haven't paid for yet, and that's not cash. Cash is what have you actually paid for? What have you shelled out money for? Does that make sense? Why it wouldn't be the same? Net income also is going to include revenue that work you may have done for a client, but they haven't paid you yet, so you don't have the cash, but you've recognized the revenue. And remember, net income is revenue minus expenses. This is really weird. I think it's the color. I gotta figure that out because that's gonna drive me batty. I can't really see what I'm doing. All right, so that's what net income is. So remember, it's not gonna be the same, just by the nature of having stuff that's not necessarily getting paid for, or you're not necessarily gonna have cash right at the moment you have done some work for somebody or you've gotten some supplies or something like that. Okay, so this occurs because revenues and expenses may not be recorded. At the same time, cash is received from customers or paid to creditors. So do y'all understand where I'm coming from on that? All right, the next section is investing activities. And what I think about when I hear that is you're investing in the stock market because I'm a literal person and that's literally what I think about when I see investing. But that can be other things. It's like when they buy some land, that's an investment in one of these relatively permanent assets. When they sell land or they sell a company truck or a building or something like that, that's an investing activity because they're taking their money for the company and they're putting it into something that's more permanent. So that's the justification there. And then you've got financing activities. That did not, this thing's gonna drive me batty. It erases as slow as it writes. Financing. It's causing me to misspell stuff here. All right, so financing is like borrowing money from the bank. Owners putting money in. Owners taking money out. So all we've learned so far, we've seen the owner putting money in, the owner taking money out, but it could also be loans from the bank or a loan on a car. If they buy a company truck and they get a financing on it, you would see that in that section. The most important thing you're gonna need to know for the test is this, this, this. And, you know, kind of know what's in here. You know what's in there and what goes in it, but you're not gonna have to prepare one for the test. But basically the three sections, just the basics about it. Okay, we are out of time. If I do have homework set up for y'all for Friday, I'll send it if it's on the financial statements, which I think it is. So I'll let you know. I gotta take a look at it and see if I've got one out there or not. I may have moved it to Sunday night since I knew this was a lot we were going to cover. Y'all good? Y'all have any questions? Or we haven't got far enough for you to have questions yet? Yeah, it's that red. It's because it's the devil's color. Big fat eraser. Come on. See, I'm on the big fat eraser and it's not, it's still not. Maybe I need to put my big fat hand completely on the board. You know, I will say this. I hope you may think I'm stupid and crazy, but you won't be bored. I don't believe in standing up there being bored and acting like things aren't happening. That's even funnier to me. All right, y'all are good to go. Y'all have a good day. No discussion, no new discussion this week because the week's half over, but we will start on back to discussion next week. Oh, hello.
Oh, yeah.
You gotta stop. Yeah, I gotta stop sharing.
Yes, I'm recording.
Goodbye and live streaming people.